Are you with the consensus in this latest CNBC Fed survey, which says that, look, near term, forget about it, no hikes at all, but a little further out, maybe 2020, increasing odds the Fed may have to backpedal, may have to actually cut rates?
Yeah, Martin. I mean, in terms of tomorrow, I think absolutely there's no way at all that the Fed's going to be raising interest rates. But to your point, what's really interesting now is how quickly things have changed. And I think what's been really a major catalyst for part of this rally so far this year is you're right. Fed futures is now starting to price in a quarter basis point hike. You look at the 10-year, that's back to 2.6%. And what's really interesting, if you look at some of the stocks that are leading again, investors are starting to have that reach for yield. You look at companies like Philip Morris up over 30% this year, and that makes sense when you got a 5% yield compared to a 2.6% 10-year. So I think the game plan is back on in terms of lower interest rates for longer. I don't know, I'm not really in the camp of a 25 basis point cut, but I guess time will tell. But it's interesting to see that the bond market is telling us a very different story from what the equity market's telling us right now.
Yeah, we're seeing twos, tens. There's still actually a spread there, and I think there's even some slight steepening.
Yeah, we are seeing a little bit of steepening there. There was a little bit of inversion on the shorter end, but really what we pay a lot of attention to is those 2s and 10s. We haven't seen that inversion yet. If you did see something like that paired with a 25 basis point cut in Fed futures for next year, I think that would unnerve investors a little bit. But talking about investors, if you look at this first quarter, Martin, in the U.S., stock market has been on fire. We're up almost 14% on the S&P. So kind of like the opposite negative impact that we saw in the fourth quarter in terms of the consumer confidence. I think when investors open up their statements here in the U.S. in a couple of weeks, that's going to give them a boost of confidence. And that could be the thing that takes us to the next level. We broke above that 2,800 resistance level here on the S&P, and we're looking at that to be support here right now.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.